What is going on, investors? Hopefully you guys are having a great weekend out there. I wanted to join you today on a video and talk about the payment sector because we are looking at 4 stocks today. That is PayPal, Square, Visa, and Mastercard. We're going to take a look at each of these stocks. Now, more recently, I've just done earnings videos on all of these companies. Those are in the description below. If you want to see an updated look at the financials, the balance sheets, how these companies are performing on a fundamental perspective, I'll ask you to watch those videos. We won't repeat a lot of the information. What we're going to talk about on today's show is this a buy the dip opportunity when we look at each of these stocks? We're going to look at them all from a fundamental perspective, but more importantly, from a technical perspective as these stocks continue to pull back. Now, before I get into each of these stocks, I do have timestamps down below if you want to jump around to each stocks, but I want to talk broadly very first about all the stocks and the reasons why we might be seeing these stocks pulling back in the most recent days. Now, PayPal over the last 30 days is down 28%, but the decline from the 52-week high is 60%. Square is down 11% over the last 30 days, but the decline from the 52-week high is 22%, so certainly in correction mode as well. Visa, just in the last 30 days, almost in correction mode, down 14%, is in a correction. If you factor in, we're down 20% from the 52-week highs on Visa. Now, Mastercard is holding up the best. The stock is down just 6% over the last 30 days, and the decline from the 52-week highs is 15%. So is this a buy the dip opportunity in this sector with individual stocks? We'll certainly talk about each one individually, but very first thing I want to talk about broadly about buying the dip. When you're making the decision, should you buy the dip? I always go through about 4 questions in my head. Is first of all, what are the reasons for the declines? When we see PayPal down 60% from its highs, Square down 22% from the highs, what are the reasons for that? Okay, first of all, is it the broader market is declining? Is the S&P, is the NASDAQ, is the Dow, is it declining over that same period of time? And the answer to that question is no. So I feel like we can almost rule that out. Is it sector rotation? So for example, maybe investors are pulling their money out of energy and putting it into, fintech? Are they pulling their money out of traditional energy and putting it into solar? Okay, we've seen some sector rotation. And look, maybe you have a little bit of it here, but I don't know what you're going to rotate into. Sure, could you pull out of PayPal and rotate into a JP Morgan or a Bank of America? Certainly you could. And so maybe we're seeing a little bit of that. We'll keep that on there. Is there a fundamental change in these companies' business? I think we saw that potentially with Visa this week. We saw that maybe fundamentally they're not going to be able to take credit card payments from Amazon, and that could be detrimental to Visa. We'll talk about that when we get to that. But overall, I'm not necessarily seeing a big fundamental change when it comes to these business. Okay, it's not like the coal business all of a sudden being phased out in favor of cleaner energies. It's not the internal combustion engine being phased out for electric vehicles. We're not seeing that fundamental change in this space. And then finally, profit taking. And I think this could be the number one reason why all these stocks, particularly like a PayPal and even like a Square and certainly Visa as well, are seeing large declines from their highs. People, and when I say people, probably money managers in specifically, piled into these stocks when the pandemic hit because they foresaw that these stocks would benefit from an online payment flow. More people would be running credit cards online. People would be paying with credit cards more in general because the exchange of cash worried people from a health perspective. And so these companies certainly benefited. I think we saw money managers pile into these stocks over the last year or so. And then once they started to pull back, once we started to see weakness in these stocks, they decided to start taking profits on that. Not only that, we are at the end of the year. We're in Q4. Money managers need to show a profit. Money managers need to show that their fund performed as good or preferably better than any of the indexes to justify the fees that you're paying them. So I think we probably did see some institutional profit taking on all of these stocks, particularly when you're looking at Square, PayPal, and Visa more specifically, because these stocks have had the larger drawdowns over the last 30 days and certainly over the last 52 weeks. Now, let's kick things off with PayPal. So I want to start with PayPal. Like we said, this stock is down pretty big, just over the last month, down over 28%. Now, some of it is a little bit fundamental based when it comes to PayPal. And Bernstein kind of wrapped it up in a most recent downgrade on the stock. In fact, this was just a couple of days ago. And this is a quote from the analyst. He says, "We are watching the likelihood of slowing share gains." And he's talking about the market share that PayPal has from 1,000 cuts. So he's saying there's people coming after PayPal's market share all over the place. Okay, you've got buy now, pay later. That's Affirm, that's Square's offering. That's a number of different offerings out there. Even Chase and the traditional credit cards are helping you divide your payments up. Now, we've got Apple Pay as well, and Shop Pay, which is Shopify's offering as well. An improvement in card on file / saved card experience. So in the past, PayPal had a competitive advantage because if I wanted to pay for something online, I could just click a couple buttons, log into my PayPal account. I didn't have to bust out my credit card, know the expiration date, and all of those types of things. Now the browsers, Safari browser, Chrome browser, all the different browsers out there, and certainly if you shop inside of an app, you can save your card on file. It makes it easier to do shopping without a PayPal, quite frankly. And not only that, overarching all of this, PayPal is no longer the exclusive payment provider on eBay, and so a lot of the payment volume on eBay all of a sudden is now getting divided among Apple Pay, among credit cards, among other providers other than PayPal. And the analyst goes on to say that Shopify's meteoric rise and push toward its own payment platform is particularly problematic. So inside of Shopify is trying to control that entire payment flow themselves. Now, from a traditional valuation perspective, and I always like to pull this up when a company goes on a rapid decline like we've seen PayPal do over the last 52 weeks, but certainly just over the last 30 days, the stock is down big. And so what I like to see is, can we see this stock pull into a range from a traditional price to sales ratio that makes some sense, okay? And it could be that the stock was just simply overvalued, okay? I pull up price to sales. You could pull up price to earnings and maybe see a similar type things, but because interest rates change, because income taxes change, I don't always come down to a net income on an earnings basis. I tend to look at just top line sales, and that's why I look at a price to sales when I focus on traditional valuation metrics. And we're seeing right now, PayPal's trading at about 9 times sales. It's not quite as low as it was trading kind of pre-virus in 2019. In fact, we've got it lower than 8 times sales there. So yes, we've pulled back. This stock was trading north of like 15, 16 times sales, and we've pulled back tremendously. We're currently trading about 9 times sales. It's not screaming out to me that we're tremendously undervalued with PayPal, or we're back to levels that we haven't seen before, but we're getting close, okay? Another point off this price to sales multiple, you get down to about 8 times sales, south of 8 times sales. In fact, very close to 6 times sales is where this stock bottomed out in March of 2020, when the entire broad market was bottoming out because of the news that was hitting around that time. Now, what I want to do is go over to PayPal's chart, because we'll look at this from a technical perspective as well. And what I have on here is these blue boxes. These actually illustrate kind of a peak to trough drawdown in the stock. And so we can kind of get a sense like, okay, PayPal is sold off like any stock out there. The stock has sold off, and it's sold off pretty steep. So I want to kind of compare over the last year or so the degree of that. And so with PayPal, from the peak of 2019 down to the bottoms in March, like most stocks sold off during that time as the virus hit the shores here in the United States and lockdowns and all that stuff started occurring. Well, we saw a peak to trough drawdown at about 34%. Now, earlier just this year, we saw this stock go down about 28%, and more recently, the peak and the bottom that we're seeing right now currently is sitting at 37%. So believe it or not, the drawdown over the last couple of months with PayPal is actually steeper than the 2019 into 2020 drop, where we saw the entire market drop. So this stock in particular, PayPal, has really, really declined rapidly. And so I'm going to take these boxes off so we understand that this stock is in the steepest downtrend that we have here on our chart over the last 2 years or so. It is pulling into an area of support, but we said that up here at 215. We said that at 225, okay? There were very firm levels of support at 225 on this stock. There was levels of support at 210, and now there technically is some levels of support here at 192, but more specifically, I don't see it down here until we get to about 173, 174, you could call it even $175 on this stock. When a stock is just cutting through layers of support. And what do I mean? Maybe some of you are kind of new to looking at charts. What do I mean by a layer of support? So I want to direct you up here to this $225 level. So this is up here. This level held, okay? The stock bounced right here at 225. It did it again, okay? It went all the way up to $300 and came all the way down to 225 and bounced again. That is showing you there is a pattern here. And that's what we look for when we look at charts, is we look for patterns, okay? Because this is human behavior right here, and humans do things in a pattern, and there's a lot of computerized trading as well on the stock market. Those trade in patterns as well. And so what we saw with PayPal is there was a pattern here. The stock would hit 225 and bounce, hit 225 and bounce, hit 225 and bounce, come close to 225. We got to about 235 and bounce. And then we came down here, and right before earnings, where were we? Right at 225. So when we broke that level, that's bad news, okay? The next level we had marked out here was about 213. And it just sliced right through that. That is double bad news. When you get that bad of a news, it does not, I repeat, this does not make me excited to buy the dip on a stock. Okay, and I'm talking about immediately. When you cut through a major area of support and then another one in the matter of a few days, that is a red flag to just put this on your watch list and watch what happens. What are you watching for? You're looking for now a sign of reversal. And this is just kind of a generic kind of illustration of different reversal patterns, okay? For the most part, what you're looking for is higher lows, okay? This is something called an inverse head and shoulders. Whether or not it makes this pattern, I don't know. What I do know is you were making lower lows all the way down, okay? And then we started finally to make higher lows, and then we broke above this previous area of peak right here. Once the stock broke above, then it's off to the races. You're looking for a rounding bottom. You see this often with IPO stocks. They come out super hot, they take a big drop, and they tend to make these rounding bottoms. Okay, you can look at an Airbnb, you can look at a Coinbase chart. You'll see maybe not textbook example of a rounding bottom, but you'll see something like that. A double bottom, you're looking for a bottom and a higher low, okay? A peak up initially, the stock will come back down, but it won't come down as low as it previously did. A triple bottom, you're basically just consolidating sideways. That's kind of how I describe triple bottoms, quadruple bottoms, however many bottoms you end up having, okay? You end up going sideways here. And then kind of a bullish wedge, you're really just looking for the sign of a V reversal, and it's typically led by a big old green candle. You get a big green candle up and above previous areas of resistance, well, all of a sudden it's off to the races. So can we see evidence of that in PayPal? We're not seeing evidence of it right now. This stock is in a straight line downwards. I would not want to buy this one. I would not want to buy this stock until we get above right now about 212. Okay, that would show me that this was a bottoming formation. So 212 is right here where this blue line is. Okay, I would not want to buy this stock until this stock got above that. Okay, and even if I bought it there, I would have the understanding that when we talked about this 225 level with PayPal, that is resistance now. Okay, it acted as support. Okay, it was like our foundation on our house. But now we dropped through it, okay? And now we're underneath the ground and we're trying to poke our head back up through a really firm level of foundation. It's going to be pretty tough. And so even if I bought here at 213, I wouldn't be super excited because I know my upside is probably back up here to 25 only to see the stock retreat again. Okay, and so really with PayPal, from a technical level, this is completely broken down. This is not a stock I would be super excited about jumping into until we see some sign of a reversal, okay? And you have no hope of a reversal until you get above about $200 per share on this one. More specifically, I'd probably wait until you got above 210, 211, 212 on this one before you could say maybe this level right here is a low. We've made this big leg lower and we're starting to reverse. The other thing that I think could potentially happen is we go sideways. You could accumulate this on some sideways consolidation. But again, right now, it's looking like, to me, from a technical perspective, this stock just wants to keep going lower, okay? And so if you want to not, say you're stuck at PayPal at a higher price and you don't want to lose your shirt, okay, down here at about 172, if you break this next level, this is the next key level of support. I would say you could even bump this up to about 180, okay? You start breaking this level, this level, this level. Well, oh my gosh. Okay, this stock could get down to about $100 per share really quickly, okay? And so those are the risks. There is some reward with this one, but I wouldn't jump into it right away. That's just my personal opinion. I would wait for a reversal pattern. You can study these. You can bring these up in Google. You can look at other charts and identify these. But in general, we're looking for something like this with PayPal. Right now, this chart doesn't have any appearance of that. So I would be careful with PayPal. The next stock we're going to take a look at is Square. Now, over the last 30 days, the stock's down about 11%. The decline from the 52-week highs is 22%, and we don't have earnings on this stock till about February 22nd. Again, the earnings dates I have on here will certainly move around. These aren't set in stone, but right now the stock is not really set to report earnings until we get to about February. So we've got a long time before Square does anything on that earnings front. Now, some things fundamentally with Square are different than all the other stocks that we're looking at here, okay? First of all, Square is probably the business that is the least mature, and I'm not talking about from a maturity standpoint. I'm just talking about this company is still growing, okay? They're still developing their Cash App. They're still developing their in-person payment processing. They're still working on lots of things. The other thing that they're doing is they're actually investing in business models that are completely different than your traditional payment methods, okay? Square actually purchased Tidal, which I believe was a Jay-Z-backed streaming music service. They acquired that back in March in exchange for, I think, some cash and some stock for about $297 million. Not a small chunk of change, but when you factor this company has a $100 billion valuation, well, this stock, you know, this is an interesting acquisition. Now, they're starting to do some things here, but this stock, Square's interesting, okay? Because it's kind of your traditional fintech kind of PayPal play, but it's also like Spotify, okay? And so it's an interesting, you have to be comfortable with that if you're going to be investing in Square. You've got a little crypto exposure as well. You have Jack Dorsey running this company. He tends to be a little bit more aggressive than some of the other CEOs that we see in this space, and that can certainly be a good thing, but it also can elevate the risk in the stock as well. Now, the stock is slipping, and this was back when they reported earnings earlier this month, basically because their Bitcoin revenue slid tremendously. So Bitcoin revenue was expected to come in at about $2.6 billion. The company only reported about $1.8 billion worth of crypto revenue. And so look, some of that has to do with the fact the volatility kind of slipped out of crypto market. It seems like when we looked at Coinbase, when we looked at other crypto companies, people are kind of holding their coins, at least when we're talking about the upper echelons of the coins, like the Bitcoins and the Ethereums. It seems like people are holding them a little bit more right now and not necessarily trading them. Some of the lesser known coins are certainly have higher volatility over the last few months or so. But in general, Square's business was actually quite good during the most recent quarter, but we did see analysts did downgrade this stock. In fact, we saw the price target from one go from about 371 down to 359. Not that big of a drop, and considering the stock is at $225 per share, that's still a tremendous gain on this one. Now, what I do want to do is take a look at the Square chart. It looks a lot different than PayPal's. In fact, it looks a lot like Mastercard's. We're basically in sideways consolidation with Square. Now, that does tell you that the momentum is out of the stock, okay? Because you had a massive run, okay? This stock was under $38 per share in March, like a lot of stocks in March of 2020. A lot of stocks pretty much bottomed at that time, and then you put on a big leg of growth, okay? The stock went from 38 up to over $220 per share very, very quickly. And so it's actually only natural that this stock sideways consolidates. So in my opinion, if you really like Square, if you like this company, well, I tell you what, this is an area I wouldn't necessarily step in here at $225 per share. You're essentially in the middle of a area of consolidation. So this area at 225 is basically almost in the middle between about 195 and up to about 270 on this one. I personally would like this stock lower than that because as you saw here at 195, this level has found support at that 195, call it $200 level multiple times over the last year or so when it comes to Square. So we are sideways consolidating on this one. It's not my favorite chart pattern, but if you're bullish on Square, you like Square, you think this company, you're going to buy this looking forward 4, 5, 6, 7, 8, 9, 10 years down the road, well, sideways consolidation is not necessarily the worst place to acquire a stock because what stocks tend to do, really good ones, is they go on these big old moves because the market kind of gets behind them. You get a momentum, you get a drying up of sellers on the stock. Well, and then eventually everybody's got to take a breath. Everybody's got to stop for a minute, kind of rethink things, let this company catch up from a valuation perspective. That could be what you're seeing with Square. Is the stock's just consolidating sideways? When a stock consolidates sideways, I like to buy in the bottom end of the consolidation zone. And in this case, that would be south of, we'll call it about $215 per share on Square. The next stock we're going to look at right now is Visa. This stock over the last 30 days is down about 14%. The declines from the 52-week high is technically a correction zone. We're down 20% on this one. We don't have earnings until about January 27th when it comes to Visa. Now, opposed to the other stocks that we've looked at, Visa actually has some fundamental stuff that's going on with it that should have investors at least marginally concerned, although I'll talk about kind of the contrarian view to that as well. Now, Amazon is considering switching its co-branded card from Visa to Mastercard. This is according to Bloomberg. So if you have an Amazon card, Visa is the merchant processor on that card. And the way Amazon negotiates lower rates, so basically what happens is you get your Visa card that has an Amazon logo on it. You buy stuff on Amazon. Amazon pays, I would guess, a very small fee to Visa in order to process that transaction. Now, what Amazon knows is that's a great way to add margin to your business, right? If they could just take home 0.001% more of all the sales that run through the site. And look, Amazon's running at north of $100 billion worth of sales in a quarter. So we're talking about $400 billion worth of sales or more during an entire year. Well, yeah, 0.001% or something like that. And I'm kind of paraphrasing here. Okay, I'm sure the negotiations are a little more complex than this, but basically what Amazon is doing is they're pitting Visa versus MasterCard because Amazon knows these are the only two merchant providers that are capable of having a system in place to process the amount of payments that Amazon needs. And so it's basically pinning these two companies against each other and letting them drive the costs down to Amazon. It's a great move by Amazon, and it's certainly something that Visa will definitely anticipate. In fact, I'll show you management commentary here in a second, but I also wanted to show you this. These press releases both came out in the same day, very damaging to Visa stock as we saw the stock pull down quite a bit during these last few days of the market trading. Now, Amazon is to stop accepting Visa credit cards issued in the UK next year. But people highlight that the UK, we're not disrespecting anybody in the UK, but it's a small country, okay? You've got all of Europe, you've got all here in North America, United States, Canada, and quite frankly, around the world. One country, not necessarily that big of a deal unless we're talking about all of Europe, all of the United States, all of China. Those are the companies, or excuse me, the countries that could really hurt payment volume. Now, the Visa CFO did step out. This was just yesterday. He expected to iron out both of the Amazon disputes. And he says this is really typical in their business. They tend to have these all the time. These come up all the time. And this is a quote that he says, "We've resolved these things in the past, and I believe we'll resolve them in the future." And he's referring to the two stories that I just quoted you. The fact that Amazon is maybe switching to Mastercard when it comes to their provider on their credit card, and they're not accepting Visa issued credit cards in the UK for payments on Amazon as well. The CFO of Visa is expecting that to get worked out. We also saw analysts from Barclays, Morgan Stanley's, and I saw others that basically defended Visa in saying, look, we see minimal impact to Visa's profit and loss, if any, based on these types of things. Now, the Amazon, it says Amazon is basically just conducting market tests. They're looking for other options. So basically status quo. So we're not necessarily seeing a fundamental change in Visa business, although these press releases are worrisome and they certainly have sent the stock lower. Now, when a stock goes lower, what I like to do is compare it to itself. We pulled up a price to sales ratio of Visa over here. We certainly could have looked at price to earnings. We could have looked at a number of different things. I tend to look at price to sales only because net income can be really manipulated for a number of different ways, okay? And so net income, in my opinion, not necessarily the best way to judge from an earnings perspective, but from a sales perspective, Visa's sales 5 years ago are very similar to their sales today, so I think we can compare these. And we see right now the stock is trading down to a valuation that we didn't see basically until 2019. Now, it was kind of the peak valuation that we saw back in 2019. That was close to about 17 times earnings. That's basically where the stock is right now. And I think I said 17 times earnings. I mean 17 times sales. The stock is certainly traded lower than that, but it was when the broader markets were selling off in February of March of 2020. So we saw this stock trade all the way down to about a 12 times sales multiple. Does it get that low again on Visa? I don't necessarily think so. But right now, the 16, 17 is what I would consider kind of a median price valuation when we look at a chart like this. So it's not the worst spot, I don't think, to necessarily acquire Visa from the kind of the fundamental perspective as well. Now, I want to look at Visa from a technical perspective as well. I've got some boxes on here to show you the different drawdowns that we've had on this stock. It's not immune to big drawdowns, okay? Back from the peak to trough, back in March of 2020, we saw this stock decline over 37%. Wow, okay? And then shortly after that, this stock actually went down about 17%, okay? Just kind of a normal correction cycle. And I think we're seeing a similar type thing. The stock rallied super hard, and more recently it's down about 20%. And I'm going to take these off because we're actually pulling in to an area of support when it comes to Visa shares. Now, we've got this level marked out here right at about $200 per share, which is looking to me, it was a topping back in here. So the stock made this major declines like a lot of stocks did back in March. It rallied super hard, and right here between about 188 and 200, the stock basically chopped sideways for a while. It was basically the market saying, hey, we've had a major run here. Let's take a breath and see what happens with this stock. Well, it continued to rally, but now we're all the way back to this level. Basically, I see an area of consolidation here between 188 and about $200 per share with Visa that I really like this stock. I personally will likely buy some shares in this area of consolidation. Now, let's factor in that we could bottom out here at 200. We could form a bottoming formation. We looked at them on the PayPal chart. We would see something like higher lows. We would see a chop sideways followed by an upward momentum move. This chart doesn't look like it wants to present that, so I have to assume we're likely going lower on this stock, but I do like these areas between about 180 and 200. I like them from a chart perspective. I also like them from this traditional valuation perspective. You get this stock continuing to move lower. You're getting at a price to sales multiple that I don't necessarily think is super unfair. And the last stock that I want to take a look at is Mastercard. Now, this stock has performed actually pretty well compared to these other stocks. It's down only 6% over the last 30 days, and its peak to trough from the last 52-week high is down, I don't want to say just 15%, but certainly compared to these other stocks, that is the lowest. Now, we don't have earnings on this one until about January 27th. The broader thought that I want to leave you before we look at the technicals on Mastercard is, okay, if this whole sector is coming down and it's going to continue to come down, well, I would bet Mastercard probably has even further to fall, okay? And so that's something that we have to think about. If this sector doesn't reverse and the money keeps flowing out of it, well, we have to assume maybe even more money proportionally will actually be flowing out of Mastercard since their performance has actually been relatively good. We'll see if that materializes. That doesn't always materialize. It could be something fundamentally also with Mastercard business. And quite frankly, this chart looks very similar to the chart that we looked at with Square. Stocks made a major run and is consolidating sideways. We're seeing the same thing with Mastercard. Stock made a major run, but it had a big drawdown, okay? Like a lot of stocks back last year in 2020, the stock went down 40%, like 39% just in a couple of weeks. Hello, that will blow up your portfolio. But like a lot of stocks, it rallied hard and it really has chopped sideways, okay? And yes, it's had a nice rally, but it didn't have nearly as much rally as like a stock like PayPal. I mean, look at PayPal, how much that stock rallied. So there's a reason also why Mastercard might be holding up a little bit better, is this stock didn't get out over its skis quite as much as maybe the rest of these stocks did. Now, we're in an area of sideways consolidation on this one, and we're actually kind of towards the low end. So if you do like Mastercard, well, this can be an area. And if you're looking 4, 5, 6, 10 years out on this one, I wouldn't look to necessarily pinch pennies, wouldn't look to necessarily get in on the bottom. I look in those cases, which is the vast majority of my buying, I just like to get below kind of the middle of the trading range. Right now, I see our trading range at the bottom being about $325 and the top being these highs up here at about $390 per share. Now, I don't like to buy up here at the top. I'd much rather buy the breakout above all-time highs. You can look at a stock like Nvidia. Okay, stock traded sideways, you got above all-time highs, and boy, the stock ran. Same thing here. Stock traded sideways. Once you got solidly over the previous highs, this stock went from 240 to 329 in like a couple of weeks. And so that is why when we consolidate sideways like we have on Mastercard, if we were up here at these highs, I personally would just wait till we got over the highs, okay? Because we're either going to get rejected here at 390 and go much lower, or we're going to break above and we're going to have potentially an Nvidia-like breakout. And so I personally like to wait for the breakout because there's plenty of air underneath a stock when it breaks to all-time highs. You can look at Microsoft, you can look at Google, you can look at Nvidia, you can look at a lot of different charts out there. In fact, a lot of these charts probably exhibited that same formula as well. When it broke to all-time highs, the stock just ran. Now, we're in a little bit opposite situation right now. We're actually below kind of what I've marked out, kind of the middle of this range. We're down here at about $339 per share. I actually expect this stock to probably come down to about $330, maybe even as low as $325. That can be an area where you bought this over the last year or so. People have stepped in. Hopefully you've enjoyed today's show. A look at the payment sectors. A lot of these stocks are down tremendously. It is worth putting them on your watch list and to see if we see any signs of reversals on these ones, because you could have some major gains over the next 6 months if these stocks can regain their momentum and then go back to where the all-time highs are. That would be a smoking hot gain, and I think it's something worth looking at. Hopefully you guys enjoyed this video. Back again soon with more. Good luck with your investments.